GM Lads, we have a great episode for you today. One brief note, we've added a section in the middle that is one day after we initially recorded yesterday. We did hear back from the Hyperliquid whale. He sent us some DMs. He wanted to present his side. So after our discussion, we add 5 minutes around the middle of the show. So that's the transition. Enjoy the show. GM, everybody, we're back once again. We had to come back yet another week.
3 weeks in a row.
3 weeks in a row. We have Dim Selk once again with us. Welcome back, Dim. You're a fan favorite on your segment.
Hey, everyone. Good to be back.
Good. We'll get a lot of your market takes. We got a lot of topics today. We'll start with just a quick look at the markets. It is a bit of a rough ending to the week right now. I think we're way breaking through 110 on Bitcoin at the moment as we speak. And Solana is kind of holding up okay, I would say, but ETH is dribbling. And what do you make of the market, Dim? I mean, you kind of called you called it that we were starting to get a bit cooked. What were you seeing?
Yeah, I mean, I'll tell you exactly. And there's this guy, Avi Feldman, who's a great portfolio manager. I used to work with at Golden Tree, and he's now a great friend, who has this framework for allocation of capital, which is, when people buy crypto, they're allocating to either momentum or value, and your job as a trader is to basically know who's in the driver's seat and trade accordingly. So if we take this framework to the current context and to the context a couple of weeks ago and ask that important question of who's in the driver's seat, that's a useful kind of framework to kind of make that decision. So, okay, let's answer that question, right? Is it value buyers? I would say that Bitcoin was and kind of is, along with alts, kind of overvalued here. I don't think, allocators that are here for value and have deep pockets are buying coins for the long term. So I'd say the answer is kind of no. I would also say that allocators that are here for value and that's a key area for people. But here, no, I still don't regard it as much value around 110K. So I actually think that price of 110 is kind of an unstable price. So let's say that's off the table. Now, in terms of momentum, right, which is the second part in Avi's framework, do I think that we're in a strong momentum regime? What I think about momentum is we just went through a really strong momentum time, and that momentum is clearly deteriorating, right? You still have treasury companies that are buying, but their MNAVs are kind of compressing. Sailor is kind of tapped out. So can you buy here betting on momentum, or could you buy a couple of weeks ago betting on momentum? I don't think so. So that was roughly my line of thinking, and still kind of is.
But I guess speaking of momentum, Justin pointed out that Tom Lee is on vacation for the next 10 days or so. So if you share my screen,
Isn't he on vacation in Korea? I think.
So maybe he's buying an upbit.
Yes.
But it's kind of like this meme where ETH BTC is teetering on the edge. Maybe we've topped, and then Tom Lee's on vacation, and the ants can't hold up the little beach ball here. And I think ETF inflows have become out, or it's gone negative as well. So it seems like the momentum buyers have also kind of been tapped out. So maybe we're going to see some chop, and we'll see if buyers step in.
We were talking about this before the show, Dim, and I actually tend to agree with you. I feel like we're talking about this in a lot of different circles and different Telegram chats, and I've seen it in some context on Twitter as well. It's like most of the, and I talked about this 2 weeks ago, most of the move has been captured on BTC and ETH and Solana and basically all of the majors. And so the potential upside here is most people are not even counting on another 2x in BTC, ETH, not even close to that before we see some sort of major correction, like a cycle end. And so the risk reward is just very diminished. And that's why, I've started taking profit at the top and will continue to do so over time.
I think you're right. I would say that, and I've been talking to a few people about this, if there weren't treasuries for Ethereum, Solana, and other coins, I would say that my ceiling for Bitcoin in this liquidity cycle would be higher. But that just isn't the case. We've seen so much value kind of moving towards other DATs, and that's not constructive for Bitcoin. And I think it kind of speeds up the liquidity cycle.
But this is what we see with every cycle, right? Like BTC leads the way, and then alts lag, and then alts catch up, and no one's really left there to buy BTC. And people like we're seeing a Hyperliquid whale rotate massive billions of dollars from BTC to ETH. I think that's just the nature of our industry, right? Like people get excited with Bitcoin, then they bid down the risk curve to find assets that will give them a higher multiple or a higher return, and that's sort of the end of the days.
This is true. I, for the most part, agree that the dispersion is bearish, and it always has been, and we've seen it many times. We can talk about this whale as well, and we should. I think the one counterpoint is that gold is outperforming stocks, and that is usually when sometimes Bitcoin can take the lead back because of the correlation there, and obviously stocks are a bit more correlated with your altcoins. And this rate cut that is expected now on the mid-September meeting of the FOMC is part of that rotation back into gold. As you get lower rates, the cost of capital is lower, and Bitcoin has similar properties. So GLD kind of pushing all-time highs again. What a chart. Bitcoin way off the highs. So I think that the one thing making me kind of still remain bullish on BTC is gold's situation. Otherwise, we're kind of in a bit of a gloomy spot.
Do you expect gold to just be in a uptrend for the next couple of years, or do you think at some point that will change for you?
It'll always be in an uptrend as long as Bitcoin hasn't replaced it. It just has this property where it'll do nothing and then it'll just jump, do nothing, jump. It's just part of the monetary cycle we're in, and the debt cycle. So let's see. Hopefully, but next episode we have better news in the market. But there are a couple of things, main topics we wanted to get to. We'll get to the Bitcoin whale as well. But I think the main topic today, a lot of discussion on Telegram channels, a lot of heated discussion on Twitter. And the topic is this pre-market on Hyperliquid that got liquidated. I think $150 million or $180 million was lost by people trying to, in essence, like hedge some XPL, which is the plasma token that will, go live sometime in September. So the story here is we've had pre-markets a few times for expected launches. We had one for Pump Fun. This one was only like 3 days. It was very close to the actual launch of the token, and it was super popular. I think Hyperliquid launched it first. They got hundreds of millions of open interest. We talked about it. It was part of them establishing themselves as like a real competitor because so much of the open interest was built there. People were, in essence, getting allocation to Pump at 4 cents, and then they were able to hedge it at 6. And, there was this risk of a short squeeze back then as well. But because I think it was only 2-3 days and it would have taken hundreds of millions, nothing happened. That went smoothly. People managed to buy 4, sell 6. A market happened. People got, what they wanted out of it. Nothing bad happened. Fast forward to this week, kind of a different situation, unfortunately, in terms of the details. We have, another hype launch, Plasma, that's also done a pre-sale. So people have allocation. They did 10% sale. So 10% of the tokens are going to be unlocked and in a lot of farmers' hands. In this case, Binance went first. And my understanding is they did it in order to they were worried that Hyperliquid was going to beat them to the punch and do the same playbook as they just did against Pump Fun. So they did it themselves. Now, they did way, way, way too early because this, we have no date, and it could be weeks before the actual token launches. And so really jumped the gun as a commercial decision to try to build the open interest and give people a place to hedge before anywhere else. And Hyperliquid a few minutes later just followed suit because Once Binance is doing it, then I guess it's fair play. We're starting the game. So this context matters. There's a little bit of metagame here between these like 50 billion, 100 billion entities that are trying to front run each other for these like metagame reasons. In essence, you have the same risk as pump fund, but now many weeks to play, and bad things could happen, and bad things did happen. And we can talk about if we believe, the story of events here, but the factual way to put it is that some large holder of USDC across multiple accounts on the 26th just blasted buy orders repeatedly and kept doing so. At some point, there wasn't enough liquidity to absorb all the buy orders. He was buying, tens of millions of dollars worth in rapid succession. And we can see the chart here. I mean, it caused this wick to 1.8, which is 18 billion FTV. And then, went all the way back down to 6 for a few days. And, since then has been still moving around, but not in the same amount of liquidations. Meanwhile, Binance and Bybit, who also had the pre-market, had literally no liquidations whatsoever. So this was a hyperliquid thing. And yeah, I think this has caused a lot of emotional responses from people who have lost a lot of money. There's, as I said, about $160 million lost across many accounts. For most part, these are very crypto native people who participated in the plasma sale, and then they use Hyperliquid. So you have like your most real users. As far as there's real users in crypto, like these are the real users.
That 160 million you referenced, like, can you just share who does that go to in the market, right? Like there's a small fee for hype, but does that go to this market buyer that was buying tens of millions of dollars? Does it go to everyone that sort of shorted at the top there? Like who's actually extracting that value?
Yeah, good question. So it all depends on the microstructure. In this case, there was something called an ADL, which is the auto leveraging. Basically, when the position is too big and people are getting liquidated, so nobody's on the other side, it just closes other people's positions. It closes the longs. The longs get closed. So this guy who says he's unsophisticated and didn't know what he was doing, and he's the 5th time trading perps, and he's just like some guy who's like FOMOing, he basically just got his positions closed automatically without even having to do anything. So he literally just pressed buy, and then the thing just went whoop, and then just closed him at the top, gave him, tens of millions of dollars across many accounts, and then just went back down. So some of his tracked wallets we see here made 38 million.
And this guy just claims that, I just wanted a decent percent of the supply. I should have just done it OTC. And then I guess he ended up selling the top around like $1.10. So in your eyes, Jordy, do you think this is an unsophisticated player that just wanted to ape plasma, or is there something more fishy going on?
It's unclear if his justification, look, I have a high tolerance, and I believe that there's a lot of retards out there that sometimes have 9 figures, and I am willing to generally believe stupidity is responsible for a lot of things. So I always err on the side of stupidity instead of thinking that there's some master plan genius thing going on. And usually that's correct. When we talk about the Trump tariffs or other times, I'm just like, no, this is stupid. They're going to realize it and back off because there's no 4D chess. So look, maybe I think the other version is he's kind of realized that what he did in traditional markets is certainly like a jailable offense. Like it's a very, very, very clear case of market manipulation. The fact that the price went back to where it was means that this temporary dislocation was just, in fact, an exploit on the microstructure and not a representation of, the actual price, the fair price. It was just, and so I think he might be trying to cover his tracks, and now he has continued to bid. So he took all the money, he made another 38 million across all these accounts, and then he's just continuing to bid. And again, that kind of gives him cover because he can say, look, it's like the roaring kitty thing. Like I just like the coin, I'm just buying the coin. I like the coin.
So yeah, this whole thing lasted, for context, like the major spike was literally under 3 minutes, this is the 1 minute chart, which is wild.
Mhm.
In this situation of Hyperliquid, obviously, the Hyperliquid team didn't do much. Do you think, Jordy, that if this had happened on Bybit or Binance, we would have a different result?
I think it's undoubtedly a very different city that you're going to. If you go to Wild West, Hyperliquid, yes, maybe sometimes like if they themselves are getting hurt, like their vault, as we saw in the Jelly incident, which if you guys remember, I gave them a lot of slack. I said, like, I fully agree with the decision to just freeze the thing because that's the only thing they could have done at that point. Perps have an issue when somebody corners a spot supply, and they did the right thing. Just teach this guy a lesson, then hopefully, like, that he doesn't come back. So they totally screwed over the manipulator and just gave everybody back their money, refunded, rolled it back. In this case, they didn't. I think it's not an easy decision. It's not their vault, so it's users, and you can just say, like, there was a warning. If as all these pre-market perps, if you go to OKX or any of them, they say this is a risky thing. Yeah, so there's a few first principles philosophical things this comes down to, which is like, one, are perps in pre-market different than perps that have an actual spot token that's live? And I argue that they are, and I think Hyperliquid's position is that they're not. We'll look at that. The other thing is, when someone is manipulating, and in crypto, there'll always be somebody that will try to press some button and take the money if it's there. There's no ethical certainties around the participants. So Binance and Bybit, they are able to take custody of your funds. They have the funds. So if you want to withdraw, they can stop the withdrawal. I think Hyperliquid's harder. And I think in the Jelly incident, they literally had to get the validators to just freeze the chain and stop everything and then reorganize and then, do it again. So they would have had to do the same thing here, which is very messy. And I don't think they want to keep doing it. I think at the end of the day, the Binance market is more secure because criminals, in this case, I don't know if this guy is just retarded or he was meaning bad, but those kind of moves would have been flagged, count frozen, and then the incident would have been resolved, in a very centralized way. While here you just have, the guy shoots the gun, and then if nobody shoots back, he just killed people and taken their money, and that's it. There's no sheriff. And there's been a lot of people that have taken the side that, look, code is law. If you want to stop the bad guy with a gun, just get good guy with a gun, and basically all you need to do is just have more money than him, and you can short him back down as he's trying to do it. So just as he's starting to go up, it means there's a 40% arbitrage. So then if you have unlimited money, you can just take that 40% that he's giving you and hedge it on Binance with the opposite, and you made money. So this guy just gave you money. And I think that's the position that to steel man the other side. And at the end of the day, they're saying, look, we warned you, it's risky, it's a self-referential market. So the other thing which they did change after the fact, I think they at least started referencing Binance and Bybit, or at least Binance price. So it's not just a self-referential thing. Yeah, Dim, I think you had some analogy on the self-referential oracle.
Yeah. I mean, that's basically like having a mirror looking at a mirror itself. So it doesn't really work. It feels like an admission that, okay, that self-referential oracle is very exploitable.
In essence, what you have here, I will describe it as such. It's either you have a real financial instrument, and what Hyperliquid is trying to do is build the new Wall Street where actual financial markets are happening, or you just have a dick measuring contest where this guy is putting 40 million and then he's waiting for the next guy to put 80 million, and then they're just seeing who can put more money and push each other up and down, because the market is just self-referencing, has no relation to what Plasma's price is. It's literally just who can push the other guy into liquidation. And
why is that different than any other perp? I mean, of course, the Oracle price matters on a longer time horizon, but the funding's only updated every hour, and we're talking about a move that happens over 3-5 minutes at most. So what's actually the difference here with other perp markets?
It's a good question. Like in general, why does the spot and future come together? Because they're obviously different order books. They're just separate contracts, and they come together because people have to pay funding to disconnect the spot. The more you disconnect the spot, the more funding you have to pay. In this case, first of all, like Hyperliquid has really weird funding where all they're looking at is the rate of change of the price. So right now, even though the price is heavily disconnected on Hyperliquid, because nobody dares to actually hedge and use it as a financial instrument. They're just using it to see if they can attack this guy. That's all they're doing. So the funding has actually gone negative instead of positive because the price has gone down a little bit in the last 12 hours. So like the EMA kind of goes down. But that aside, when you have a spot market and you pump it up without having control of the supply, there's two things happen. One, the people who own the spot suddenly, like, their spot is very valuable, and they if the spot moves together, the plasma holders, in this case, like the farmers, if the token was live, would suddenly be at $1.8 billion instead of $500 million. And so they start adding that pressure. If the two keep disconnecting, then it is a question of like, how long can you sustain it? And you can't sustain it that long. Now, I think, Hyperliquid might argue that it's the same thing here. It's just the funding doesn't start for a month. So you just need to hold it for a month and hope that nobody gets more money than you on chain in a month. And it seems like a theoretical sound argument that, if it's a month later, it's like, do you guys know that paradox where the teacher says, okay, next week there's going to be a pop quiz, but I'm not going to tell you what day, but you better study.
Right,
and then the student says, well, it can't be on Friday, because if it doesn't happen by Friday, we're all going to know it's on Friday, so it's not going to be a pop quiz. So then it can't be on Thursday, because then if it doesn't happen by Thursday, then Friday wouldn't happen. And so then, like, they just push it all the way back to the present, and then it has to happen now, or like it doesn't happen. So in some sense, like, the fact that there's no actual spot, theoretically, one can make the argument that it's the same thing. It's just the funding happens in a month, so it's still going to be there, and so you can still play this game. But in reality, that's not at all how this works. I think there are limited USDCs that exist. There are limited people that have USDCs, and so there's not infinite money. There's not infinite money, like, able to quickly get on Hyperliquid and attack this guy if somebody does something.
Or the appetite, because they could just keep the longer could keep longing, right? And so you're effectively saying it's much cheaper and easier to manipulate markets without an actual underlying spot token trading live.
Yeah. So perpetuals are this like weird thing. They're not. It's the most popular product in crypto, right? Perpetuals. Like this is what everybody does on centralized exchanges. This is the key product market fit. But this is a new product. It didn't exist before crypto. It wasn't devised by Arthur Hayes or whatever. This is like Robert Schiller's thing. It was a theoretical paper that you can do these funding rates and just force markets together. But only crypto has adopted this, and so we've seen the shit show that was going on with BitMEX with all the liquidations and like when they had to like turn things off during COVID and all these things. But there are flaws to the system. It doesn't work when you can capture all the spot, right? We've seen this before. We've seen this in many cases. You corner the spot, jelly. You just milk them forever, and like you just liquidate everybody. So there are these problems with it, and centralized exchanges are able to deal with manipulators by the fact that they have custody of the funds, so they can play referee. And the fact that Hyperliquid does not have that ability means that they have to be extra savvy in terms of how they smooth things out. And I would say that they've created a brand name where they're generally like pretty good at smoothing things out. But in this case, I think they really dropped the ball by creating a market that is completely, as we talked about, not about like a financial price discovery, and it's just who can push each other in this tug of war, basically.
Yeah. Do you think this presents some ethical or like moral issues with Hyperliquid? Because with the jelly thing, right? Because the vault was like getting wrecked, they just like reversed the oracle and then made users whole. So when they were like at risk, they reversed, right? They changed the rules. But in this instance, like it's not like Hyperliquid like loses money here, right? Maybe the users lose money, so maybe they're going to take more of like a hey, like it's a free market type of approach. So do you think that could potentially affect like the trust that people might have with Hyperliquid? So it's also Tequila says, hey, like you should. I mean, if you refunded all the losses from the jelly exploit, then why not refund user losses if they did drop the ball? Maybe they'll disagree that they dropped the ball, but do you have thoughts on this?
Yeah, it's less it's you could say it's an ethical decision. It's probably more of like a business decision, and I think each case they look at in terms of how much money is it? Can we just pay this out of pocket? They've done many times, like they've had things where like their whole site goes down for hours and then comes back and people got hit, and so they try to just refund them the money. They are worth many billions, and so if it's a situation where they can just say, okay, we had a bug, we had an exploit, we just throw some money and move on. They've done that many times before, so it's not like they they don't have business practicality. Sometimes they do, and in this case I think it's just a lot of money to do. If you guys remember, when they did the airdrop, they did give a lot of points to people who were getting liquidated as like a you're like a real user, you got liquidated. I think if they had an actual like points campaign here, or if they do an airdrop, which I don't know if they will, if you haven't done one in a year now almost, so I don't know if that's ever going to happen, but they could give an airdrop to these people, but they haven't obviously talked or shown any indication of something like this.
I guess maybe we can close out on potential long-term solutions, Jordy. The two I can think of are, one, they can, if Binance or the SEXs are a safer place, they can use those platforms as an oracle instead of this self-referential oracle. And then would the second solution be just lower leverage, even though it was quite low already for this market, just to make it more expensive to manipulate? Or do you think these pre-market perps just do not work in a DEX environment?
Just to discuss a little bit like how these prices work, the oracle price, they have a mark price which is actually used for liquidations and for calculating P&L, and then they just have like this index price which is the oracle price. This is just mainly like used for funding rate calculations, and I think they did add it. They did add it, but it doesn't change anything really, because at the end of the day, like the liquidation still happens just from people pushing it. And the fact that the price continues to be, very dislocated from the centralized exchanges who can police, and the streets, like the gang streets here, who like cannot police, and there's very few people willing to short. It's very risky to short. So we still have like 20, 30, 40% difference between the two markets, which I think sort of Jeff might be like, why isn't anyone going and picking up the free money? It's just there. Like, somebody pick it up. Come on. People don't trust that they can put a lot of money and live to tell the tale, because we just saw somebody liquidate billions of dollars of Bitcoin that hasn't moved in 6 years. Even if you're a liquid fund that has 100 million to play a game, and you start trying to push this guy back down, it's literally just like who has more money. That's all it is. So in my opinion, for a centralized exchange, it can work. Like OKX, Binance, they'll step in. For Hyperliquid, until they think about a solution, it does not work. I've proposed something to them. I've proposed that, first of all, they need to have a hard cap. If there's a hard cap on the price, then at least it cannot go to infinity. And that same reduction we did with like the test on Friday, Thursday, Wednesday, if there's a hard cap, let's say on Plasma, where we can all agree that the range we're betting on, we're creating price discovery, is from 0 to 30 billion.
What would it be? 30?
40 billion.
Okay.
30, 40 billion. It could be,
Not
like even like,
trillions?
wait,
Not a trillion.
after the launch maybe. But so let's say you say 40 billion. Then if this guy tries to play the game as a liquid fund, I know for a fact that I can come in at 20 and just with like 1x leverage actually put 100 million there and just wait to see what happens without risking liquidation, and you still have price discovery. Like if if it does want to go to 25, it goes to 25, that's fine. So this is what I've proposed. Obviously, like, it's a lot of work to implement this because they have to, who decides the cap? So they need the validators to do it. And so they have to vote, but this is the only way that I see pre-markets working on a non-centralized venue.
Would another
Got it.
solution be like you can only participate in pre-markets with, say, a new sub account that has like a 24-hour cooldown for withdrawing any profit or loss from participating in this market?
That's a whole other can of worms, because if you can freeze that sub account, then you're in essence not a DEX, and you kind of get into all this like legal stuff. So yeah, I mean, that's a nice hack to try to like, create the same dynamic where you can freeze the money if they do something wrong. But look, this was market manipulation. It's exactly the same profitable trading strategy as Avi. Now this guy, instead of like going on podcasts and like bragging about how he's like so much smarter than everybody else, he's more like, guys, like I added an extra 4 and I was just pressing, I hadn't slept and I just kept pressing the button, and then I made $50 million and I'm just gonna keep doing it again. But I don't want to go to jail. I'm just betting it. I bet it all. And like that's all Apparently this guy has like 500 million, somebody said. I don't know if it's true.
Yeah. So I guess to wrap up the conversation, like from the audience's perspective, would you recommend that, hey, like these pre-markets are very dangerous, like just tread with caution? Like would that be your advice to the audience, as long as Hyperliquid doesn't really step in and like make changes?
I would not use this Hyperliquid market. I think if you want to use a centralized exchange and you have a lot of collateral, it's okay. Remember, shorts are a disadvantage as always, which is why we get these price bubbles, because it's so scary to short and not many people want to short, and so we always get everything expensive and price bubbled. The thing that like makes me sad and pisses me off is that what the fuck is finance? Like, what the fuck is the point of financial markets? Like, it is to actually create value by having two people who want to exchange risk, and one of them wants to lay off the risk to the other one. You have these like people that participate in the NICE campaign, and this is why like it kind of sucks for Plasma. Like, these guys worked really hard. They created this whole pre-market go-to-market strategy. It worked really well, and like now like all their friends and users in essence that try to use Hyperliquid to they made the 10x. It's a lot of money for them. Like, I know a lot of people that made 10x on like 50Ks. They made 500K. It's so much money for them. They took all their money to try to hedge it and make sure that it wasn't going to be the crypto thing where you just, it marks up and then you lose it. They wanted to lock it in, and so they put all their money, and because it actually creates value, like the risk transfer from them to this guy who has 500 million and is like FOMOing. He wants to buy it at 500, whatever, 5 billion. He wants to buy it.
So Techno Revenant DM'd effectively all of us and wanted to present his side of the story. And basically the TLDR of what he said is it was sort of a fat finger, sort of a FOMO, and maybe a mix of both. He claims to have thought that the position would move like very quickly, or that that XPO would move very quickly, and he wanted to get a position quickly. I think my takeaway is really that like whether that's true or not is less of the issue. It's like don't hate the player, hate the game. Like, we have built a system that allows for this, and there's always going to be players that behave this way, in a market that allows it.
Yeah. So he said that in essence he didn't really understand differences between trading spot and trading a pre-market perp. He assumed that, quote unquote, like there was a big market maker that was the one selling, and he thought the team must have hired a market maker to sell at $5-6. He didn't even know that there's a pre-market and people are hedging allocations. He thought there's a market maker, which there is no market maker in these things. There's no one actually hired or responsible to provide liquidity. So he was surprised that things were so thin. He mentioned that he was distracted and looking at the Binance book and seeing if it was moving, and then just kept pressing. But more importantly, he gave me a little bit of background to his story. He said he was a early Bitcoin buyer, sub $10, that he went all in, and then he rotated everything to ETH in 2016. So he rode that as well, and that his style is to generally just ape really hard whenever he gets a good feeling about something.
Ape first, research later.
Exactly.
Which is what he sent in the DMs. He just didn't read the UI warning and just. That's basically what he said.
Yeah, it's kind of weird that the space is still, so nascent that you have situations where someone who has the least information can do the most well if they just, believe in something, I guess. Look, I asked him a few more questions. So in our DMs, he responded to everything. He said that he feels bad people got liquidated. He claims he wasn't intending to do that and that it was an accident. He says it was sloppy execution. He says, I FOMO bought back in too high, didn't I? I should have waited patiently, but I was afraid BTC might bounce and leave me sidelined. So like this is kind of similar to what we speculated. At least, this is his side of the story. He says he realizes that if he had bought cheaper on a centralized exchange, if there was a liquidation, he would have gotten his funds frozen. So he kind of understands that there's a little bit of wild west element. But he says he didn't do it on purpose, and that in the past he's been liquidated on looping, I think, Easy ETH. There was a DPEG a year ago, and he said that he understands how painful it is because he's gone through a similar situation with a suboptimal Oracle setup, and there was a temporary DPEG, and he got wrecked. And he says, I was also asking for refunds and airdrop and trying to recoup something. I had depression for 1 to 2 weeks, so I know how it feels, and nobody refunded him. Is what he says. I still not exactly sure how, despite getting wrecked on this, he still has clearly, hundreds of millions of dollars.
He's bought back 45% of his XPL position. At least that's what he shared with us, which is interesting.
He likes the coin. This is what he claims.
Right. So he says he rebought because he wanted to present that he's actually wanting the exposure and wasn't trying to play a game. So I think he rebought to make sure that he looks, he hasn't changed his mind. He's sorry he caused this.
Did he do that on Hyperliquid?
He did, yeah, on Hyperliquid, yeah. So
Interesting.
So that he's been running Hyperliquid again. He's half the open interest, so he's even like a bigger position. I don't know. He has a huge position again. He says he's kind of done and that he'll wait for the spot listing and see what happens. And but of course, other people can step in and try to play games with the setup there. Lastly, he says he thinks maybe Hyperliquid could do some airdrop to the people that got hurt, but I think he told Justin that he was gonna donate something to charity. I don't know exactly, but he says he feels bad. He was FOMOing, and his style is to go very hard at what he thinks has like momentum, and he just that's his trading style, and it's worked with Bitcoin and it worked with Ethereum. And he also said he did it with the Hyperliquid spot launch. So I guess it worked there as well. And so he just, this is what he does. Yeah. So I don't know if it changes any of our commentary, but it's interesting because, there's all these like interesting whales out there that are hidden that have incredible amounts of crypto. Like we don't know who's been selling $10 billion worth of BTC on Hyperliquid, and hearing at least a little bit of pieces of these guys' story shines a little bit of light of what's going on out there.
There's just so much time to be early in crypto, right? The first 5-10 years of crypto, if you were just there, you did so well, and you're probably still around. So it is interesting.
And he believed in his coins. I mean, assuming his story is true, which it sounds like it is true because he has all this money, then yeah, maybe. I guess it's hard for us to like definitively say that this is true or this is not true, but I guess it's more color, right? It gives more color for the audience to, reach their own conclusions. But I guess like we said earlier, the system was designed poorly, so this happened. So maybe that's more of the issue rather than like attacking this guy, for example.
Yeah, and it takes a while for these early Bitcoin holders to make the mistakes and lose it slowly back or lose some back. I think the guy who has 11 billion of Bitcoin, apparently that's like top 200 wealth in the world, and we don't know what else he has. That's just like one wallet that he had. And I saw some statistic, I think Balaji was saying that at like 500k Bitcoin, most of the billionaires in the world are like Bitcoin holders.
Wow.
Like if you imagine this guy, he would be like top 10, just this random Hyperliquid guy who's doing this stuff. So it does put into perspective again the inequality and some of the, I guess, incredible acceleration that happens with like this new asset. So it's good and bad. I don't know. Cool. All right, guys, we'll let you enjoy the rest of the show. So guys, here we see that soon US users might be able to choose between Binance and Hyperliquid as well, because the CFTC is saying that they will issue clarification that it is allowed, which seems to be that the bromance between CZ and the Trumps and World Liberty and all this stuff seems to be growing to the point where you, Justin, you might be able to use Binance without having to
that would
VPNs.
be absolutely amazing. I mean, Binance has so many amazing products that as the US were protected from. I mean, all like the BNB staking product where you get access to Binance Alpha projects. Like there's just so much value in being able to use Binance, and to be excluded from it and use Coinbase, which suffered, KYC hacks where all of your data is exposed. It's just been brutal. There's no reason for us not to have access to these markets. So
You know what I think is next? I think we're going to see a Binance IPO in the US at some point. That's what I'm going to call.
Oh, interesting.
Binance IPO.
Is there anything behind that, or just
No,
speculation?
I mean just speculating.
Okay. What's your time horizon on that? It has to happen in the next 3 years.
It has to happen. It has.
Well,
to
it can't happen in the
next 3 years.
last year, so it can't happen in the second year. So it has to happen.
So it has to happen now.
Yeah.
So what does that do? I mean, hypothetically, if that happens, does that tank the
Mhm.
value of BNB?
No, I'm sure they're going to find a creative way to, keep BNB pretty high.
I mean, Binance has actually been the best at driving value to their token than literally any other project in crypto. I mean, more so than BTC and ETH. I mean, it's, I believe, performed as well or outperformed them, and then has much fewer drawdowns and less significant drawdowns. So.
For sure. I mean, because I run the numbers, I don't have them in front of me, but on the downside, it obviously outperforms the general uplock, which any allocator would want that as a main point. And on the upside, it usually outperforms Bitcoin, ETH, and the rest as well. So it's honestly a pristine altcoin. Yeah, look at that.
Yeah, and the US users have been protected from this. I mean, I guess we could have bought it on BNB chain, but I would love to stake BNB, and like dump airdrops. That would be a fantastic product.
Yeah, I mean, exchange tokens that have good revenue are, some of the few altcoins that ever do well. And, Mantle, my old buddies there, they are getting integrated into Bybit more and more. And I think they announced that it's going to be used for fees. So that's been doing quite well. And I think might join the party. CRO was the other one. I don't know what the hell happened there. There was some announcement that there's some association now with Trump. This thing skyrocketed. The Koreans bought all of it. It was like number one on Upbit. They just bought all the CRO. It was trading above XRP in volume. So that's how much they love this announcement. I don't know if it's gonna last, but exchange tokens, apparently that's a thing. All right, we're gonna do a little Dim chart segment. So Dim, what do we got?
Yeah, let's look at a couple of charts here. I mean, and maybe you guys have some thoughts on this. I haven't looked that much into this, but it looks like we got about 1 million ETH in the validated Q exit, which I don't know exactly what that means. Do you guys have any thoughts?
Yeah, I can share a little bit about that. So we talked about this on the last episode, I believe. But you can see here the blue is the entry, the ETH waiting to get in and stake and earn a yield, and the red is what's leaving. And a lot of people are saying, okay, there's the most exits we've seen in history. Over, what is that, 1 million ETH is trying to get out. and about 800,000 ETH is trying to get in. The issue is the ETH that's trying to get in has already been purchased, whereas theoretically we can assume what's leaving and what's in the exit queue is waiting to get out so they can sell. These are your large holders that can't just sell massive amounts of Lido's wrap staked ETH or staked ETH on the market. They need to actually get the underlying ETH to sell it. And there's like a huge concern there that this is just a ton of sell pressure coming online. I know we've talked about whether this is priced in and whether everyone's hedging out the exposure, or maybe they're just pulling their ETH out so that they can be ready to sell in the future. But personally, like after thinking about it a lot, I think there's no other way to look at this and not be a little concerned, especially just with how well ETH has done. I mean, it's like up 4x. I mean, how much more can you really hope for in a short period of time? But I'd be curious to hear what your guys' thoughts are.
Yeah, I think it's all a part of the mosaic, right? Whenever you got to evaluate the situation of an asset, you have to look at different things. That's obviously a piece that I'm looking at that concerns me too. Maybe a viewer has a more sophisticated opinion on it. But another thing that I looked at is just ETF flows, and what I saw yesterday, so that's Thursday, kind of concerned me a little bit too, because I saw the Ethereum ETF inflows being super low, like 38 million. A day before that, so on the 27th, we had 330 million. So we dropped a ton, and it's been a while since we saw Bitcoin get more flows than ETH here. So that plus, a combination of the ETH unstaking queue plus SBET with NAV below 1 and BMNR getting close, it looks like momentum is kind
Oh,
of
wow. Is it below 1?
deteriorating. I think it's pretty close.
Yeah.
It's there. A few dashboards report different metrics between slightly under 1 to like 1.1, 1.2. But the issue is just because there's no disclosures instantly, like their disclosures when there's material updates, which is at their discretion, we actually don't know for certain what it's at.
And from what I understand, they have some cash, right? Like, so if you can spend a little bit of cash trying to get it back up, you can try to keep it going for now.
Yeah, and there's speculation that, for example, BMNR, right? Like I think they have. I mean, we don't know this for sure, but they have a couple $100 million in cash. So the question is, are they going to buy Ethereum or are they going to buy the stock, to pump the stock?
200 million. That's amp size for BMNR.
Yeah, but I mean, I know it depends like how Tom Lee wants to like, show the narrative, right? Like, are they gonna like just pump the stock, go on TV once he comes back from vacation? So, there are warning signs for sure. And I think Justin, I put the chart in the chat where like whenever ETH hits new highs, like that's typically like when Bitcoin starts like stalling.
Yeah, I mean, it's gonna get worse and worse. We talked about that this inherent conflict between token holders and equity stockholders exists, and somebody has to choose a side. Usually, the person, either the founder if it's an altcoin or the person running the DAT. And if you thought it was bad when protocols had a token and equity, and it was like, are they going to give it to the token or the equity? This is going to be much worse than that. So prepare. So let's look at another chart here. What I like this one. What do we got here? This is the daily DEX users. Okay. Wow. So there were 8 million wallets during the Trump launch.
Yeah, incredible. It's like this euthanasia roller coaster, right? And even like I think last week we kind of talked about the easy token, and like all of us were like, yeah, like who cares about this shit anyways. Whereas I think if this happened a year or two ago, it's like, oh my god, like we're onboarding celebrities, so people just don't give a shit anymore.
I don't think this is really that instructive to how we should think about the market as a whole. I think it's just a rotation of what's important and what people are excited about and what the current meta is. Like, I think this to me just shows that the meme coin, Solana, celebrity sort of aura around these tokens and the hype that they produced is just massively dwindling. And I think Solana's biggest headwind is pivoting away from this narrative, which seems to be, I mean, you can just see it's losing steam. There's nothing that's going to eclipse the Trump token. And if you look at ETH plus its L2s, it's hitting all-time highs basically every day for new usage on the chain. So to me, like, I don't think this is that instructive for how we should look at the rest of the market. I think it just shows you that like you probably shouldn't be playing the Solana meme coin internet capital markets meta unless you're really good, because otherwise you're probably just going to lose.
Well,
I don't know, the way I see this,
this is not like price though. This is just like users. So it's less saying like, oh, the price is going to be good and then less good and then less good. I mean, this is just showing that the trenches are getting eaten out, right?
Yes, but I don't think that's representative of anything other than the market that we're talking about when we're looking at like these specific coins and these types of assets. I think what it's showing you is that people are just interested in other things on chain. There's definitely less retail than there was at the hype of Trump, but that doesn't necessarily mean like there's going to be less quality usage on other chains or in other categories, in my opinion.
All right, so one more topic before we go to pasta. We did say that we would talk about this 10 billion whale. I don't know how much exactly he has. We don't even know if it's the tip of the iceberg, but the whale that's been sending billions of dollars of Bitcoin and converting it to ETH in public on Hyper Unit. So this whale has just sent an extra billion. So he's starting on that again. I don't know exactly what kind of psychology somebody holds Bitcoin for 6 years, does incredibly well on it. It's just been treating him well. It's been such a reliable,
It
wife.
Doesn't make any sense.
And then he just cheats on her with like the skank next door, who me and Justin have both slept with, for the last few years. And as soon as she puts some lipstick on, this guy leaves his wife with the 10 billion he's made and is going after the ETH skank. I don't understand it. I don't know what's going on.
The only way
this
this makes sense is if this person just has like $100 billion of Bitcoin and wants a little diversification. But it doesn't make sense to go like, when is enough? Like, I've been tweeting about this a lot. Like, sometimes you just got to be happy with your win. Like, sure, you should take profit, sell the USD, put it in the stock market, whatever you want to do. But to sell to a much more volatile, much more risky asset after it's already just 4x'd in like 3 months is crazy, right?
They're buying so much percentage of ETH. I don't think this guy understands that, yes, you can get out of 10 billion of Bitcoin in like, a week and it's fine. Try to get out of 10 billion of ETH. I mean, when the fucking foundation tries to do like a tiny sell, like the whole thing just breaks. When the market cools off a bit and this guy tries to get out of 800,000 ETH, good luck with that, buddy.
Who knows? Maybe he just wants to buy the plasma token on the pre-markets.
I mean, it's just crazy when we compare it to like the strategic reserves that we've been talking about. Like Bit Immersion has 1.8 million ETH, about $7.7 billion of ETH. Like, this whale could be as big as BMNR, and be like we said, BMNR has had such a crazy impact on the markets. Just imagine trying to get out of that. It doesn't make any sense.
But yeah, more broadly, we talked about this. The only way that ETH has anywhere near this much real value is if it becomes a store of value, because all the other games, the revenue games, like any other way to look at this is, the cultural game, it's just not worth this much or more. And so to get the store of value back, get that narrative back of the ultrasound money, and like this is like a real store of value, I think, man, I don't know. I'm not ready for going down that road again. Like,
I can't do it.
Some people are. Some people seem to be ready, so they can try it.
What about I mean, your community money thesis? Like, maybe it's not as good money as Bitcoin, but it's like the currency of the crypto community. Does that still in play?
I would think it would be in play, but this is not being driven at all by communities. Literally, like, you have one whale who owns all of it, so no one gives a fuck about the community of one dude who's like a billionaire just rotating in, and then you have like Tom Lee and some like Wall Street people basically like owning the rest. So the community is still maybe like there to some extent. I mean, I still see like the same 10 people on Twitter posting every day as they have been for the last 5 years. So
yeah, I mean, there's the super fans, but I think like the people like you and me, Jordy, that have just been in this thing for so long, we just know too much. We've been through too much.
We know too much. We know what happens.
Like, they lost us, and if they lost us as long-term believers, and like that's not good. It's not good.
Yeah. But maybe I don't like these like Tom Lee type of characters, because they're not particularly like first principles thinkers. They just like say something that catches on, like stable coins good, stable coins on Ethereum good, like this stuff. Okay.
But why is he reposting this guy's technical analysis all the time? Doesn't he know that this is exactly what he shouldn't be doing?
He used to be doing it for Litecoin, so he just tries stuff, and then as soon as something works, he's really good at doubling down, and then he's like the version of he's the Wall Street version of Murad, right?
He is a Murad, of course.
Yeah.
I like Tom Lee, but do you guys actually think he believes half the stuff he's saying about like
No,
ETH
it's
being like the 50K?
I was saying this before the show, but it's the meme like we know they're lying, they know that we know they're lying, and yet they continue to lie to us. It's like when I see these ETH price targets of 60K and beyond, I just know you don't believe that. So what are you doing? You're just trying to trick the masses, you know? It's crazy.
They know that if they put a 10K price target, then as soon as it goes to 7, people don't like it at 7 because they're like, oh, we're near the top. So they have to say it's 60. And with XRP, they did that so brilliantly, and we'll get into XRP in our pasta segment as well. But XRP, this unit bias where it's like $1, and then we can go to 10,000 like Bitcoin has
10,000.
worked so well, and Zach XBT, I think he's had enough. So he's posted this comment here. Apparently, he's saying that he will not help any hacks or anything that happens in XRP because these people are giving exit liquidity to, these founders that are just constantly just dumping 9 figures on them. So he's saying, this 140 million that Chris Larsen sent, he's saying he's not going to be investigating stuff anymore. And lo and behold, what does the community do? And this is probably what's going to happen to me now that I said one bad thing about Hyperliquid after 100 good things. This is like the kind of stuff that comes out. Look at this story. This guy says, let me explain. The reason why Zach XBT goes against Ripple isn't because of some objective analysis. He tried to do detective work for them and they were not interested. So they turned him down. And now he is using, his position to attack them. So I'm sure this is what's happening.
This sounds like objective commentary from a guy called Ripple Van Winkle.
The thing is, like, where's the ETH community spewing this sort of stuff, right? Like the XRP really has a real community. I mean, they did it.
Well, you have Sasano saying like 100K ETH, right? So that's where that's your evangelist.
Oh man, let's go to pasta because I want to see Dim's pasta because it just ties in too nicely. So let's do pasta of the week. All right, Dim, you're a guest, but this time you're gonna go first.
Well, look, Justin just said, he likes coins with communities, and XRP is the community coin I want to be in. If I got other members, it'll look like this. So yeah, I'm part of the XRP army, I guess, after this.
Okay. Investing. Don't know what to do, what it is, but I need help. I need help.
Okay, so I would recommend, so me personally, I have 1.3 million in XRP. So right now it's about $2 and something cents, but the community knows that when I know it will bump up to $10, I'm going to be basically set for life. So I would highly recommend buying XRP. XRP, I couldn't even understand what X could even stand for. It doesn't stand for anything. It's just like, XRP doesn't stand for anything like explicitly. It's just like
I'm screwed. Crypto men come this way. Help me.
Just put money into XRP and then you're set for life.
Put my money in it.
Or just spend it all, whatever you want to do. Well,
this is not even a paid ad, right? Like she just got brainwashed. They're not paying her. It's not like they went onto her podcast.
Part of the cult.
It's crazy.
Part of the cult.
And XRP has still outperformed Ethereum, which is this. Which is the.
And then I guess I got the follow on. I got the follow on to the video, which is this big.
You spent 1.3 million on XRP. This is when he says like, he's like, oh, you have 5 mortgages, like you have 5 markets. He's like, yeah, all the girls.
Are doing I mean, it's hard to see this stuff. Like, how is this not? How are these not top signals? Like, I don't think we've topped, but you just see this sort of crazy stuff.
This is
these crazy valuations. Like, how can we sustain?
I don't think it's a top signal. We honestly, I've been seeing this for the past like 8 years. I don't think it's a top signal.
No, guys.
It's a society. It's a society signal.
No.
This is a society like
moonshot generation signal.
Yeah, no, top signals are indistinguishable from signs of adoption, guys. Like we're just onboarding people. Like we're early. Let me do my pasta next. Like I know for a fact we're early. Like, I I love my artists. I listen to hip hop, rap, and I saw this video of Big Sean. If you can play this clip, he was giving financial advice at his, I think, concert. Or in the background it says Sean's liquor, so maybe he's like drunk or something. But can you play this? He says we're early.
And if it is one time that I'm gonna say this is not. You're not too late. Invest in crypto right now, tonight if you can. Like do that shit tonight. You're gonna get a return from it. Bitcoin is a good one. Ethereum.
Hell yeah,
What's the
Ethereum.
other one you said?
What's the other one?
Ripple. Invest in that shit. I'm telling y'all right now. This is a quick flip. Do it tonight. It's about to go up.
It's a quick flip.
I think
Yeah.
it's about to go up. It's not like, insider.
And the audience was like XRP.
I think a lot of people are going to get a bad first taste of crypto given what just happened in the last few days. So thank you, Big Sean.
No, it's a dip. It's a dip, right? It's just a dip. Sure. Justin, we haven't topped yet.
I still think we haven't topped yet, but I still think you should be taking profit and be selling over the next few months.
So what do you have, Justin?
Like my portfolio? Oh, pasta. Well, I really respect Tom Lee, right? Like you can just do things. Tom Lee just said, screw it. I'm going to make ETH real again. I'm going to buy billions of dollars of ETH. You can just do things. And Polkadot's trying to catch up too. Polkadot says you can just do things. You can literally just do things. And you might ask yourself, what is Polkadot? And Eric responds here, but you never did anything. And I think that is so true. I don't think any of us could really say, is there a chain live for Polkadot? Like, is there an app on Polkadot? Is it even a DeFi app chain? Are there meme coins?
Such a good layup to get fired. I mean,
Yeah.
whoever posted this is gone.
That is a brutal response. 1,000 likes. He completely ratioed the count. Wow.
But it's true, and many such cases. So move on from Polkadot if you're still holding Polkadot.
Oh man, Eric Wall, hat tip to you. It's tough out there. We're getting liquidated on Plasma. We got Taiki trying to be a influencer for prediction markets, and we all got to do side gigs. It's not easy out there. We're not doing well. So apparently, I've done a little bit of a side gig.
More modeling.
More modeling. Sometimes you gotta take the gigs, and so Popeyes came to me. Better wings. Check out Popeye's new wings. So yeah, somebody tagged me in this. So thank you, buddy, for doing like whatever Kobe's been going through for the last 10 years. He says, congrats on the sponsorship. You deserve it, brother. And let's look at some of these pictures. I mean, I don't think it looks like me that much, does it? Like, what's the...
No, it's you, Jordy. It's 100. It's you. It's you. I don't know what to say. I actually thought it was an AI version of you. Like, the AI images kind of look the same, but a little different, like just slightly more tan, maybe. But this is you. This is like if you asked ChatGPT to make an image of Jordy, this is what it would come up with.
This is Jordy 10 years ago, I think.
Okay.
Where are the shirts, Jordy? Weren't you modeling for some shirt company? Like, when can we buy those shirts?
All right. If we can get the new Genie Google VO thing, I'm gonna take this image and I'm gonna give it my picture, and then we'll put it on top. So we'll put that on Twitter, and people can judge if this is similar enough or not. So we'll use AI to distinguish the referee. He'll be the referee.
Yeah, but anyways, I mean, congrats on the sponsorship though, Jordy. Like I love
Thank
Popeyes,
you.
so if you can give me some gift cards, I would really appreciate it.
20% off, buddy. I got you. Thanks
Just
everybody
20?
for
It's a bear market. Fuck.
free small fries. All right, guys. If ETH goes back up to 5K and Bitcoin goes back to 120, then I'll get free Popeyes for everybody in the chat. So
Let's go.
Let's hope for that. See you guys next time. Bye bye.